Hello and good morning. You're tuned into Market Cafe. I'm Ankita Saxena, and this is the show which talks about all the global markets and, of course, the geopolitics and what is going to move the markets in today's trading session. So without further ado, let's get started with how the Wall Street shaped up yesterday. Now, we did see a mixed day of trade coming in as far as Wall Street is concerned, because Nasdaq shut shop 43 points down. S&P 500 was absolutely flat, and the Dow Jones traded up more than 0.5%. Now, remember, the focus is on the big Fed decision and the big tech earnings that the street is really waiting and watching out for, and that's really going to give some bit of a direction to the market. And but yesterday we did see the markets trading mixed, and the AI stocks did see some selling coming in, and on account of that, we did see Nasdaq that was down and out, 0.1% in the trading session. But let's also talk about the cooling oil prices. We did see some cool off come on the oil prices. It's now below the $90 per barrel mark, so that's the good news here. Brent crude is at $87.82, more than 0.5% cut coming in on Brent crude. WTI is also trading at $81.93 per barrel, 0.8% cut coming in on the WTI. So we do see some bit of a pause that's come on US and Iran hostility, and that has really cooled off the oil prices. So that is the bright spot today in the market. But let's take stock of how the Asian handover also looks like today. Well, Asian handover is also mixed. We have Nikkei that is trading down almost 4%. We also have South Korea's Kospi that has plunged over 8%. And remember, the tech sell-off continues. And we have Kospi that has plunged over 8% in trading session. We have the Chinese market where Hang Seng is doing well with gains of 118 odd points. But Shanghai is trading down almost 0.5%. S&P ASX 200 is trading down 0.2%, and the implied start to Nifty is also showing a cut of almost 50 odd points at the start of the day. But let's see how the rest of the day pans out, because we do have oil prices that is in our favor, at least for today's trading session. But also, let's talk about the geopolitics. US President Donald Trump says that Washington is holding good talks with Iran after pausing the airstrikes, but warned military action would resume if negotiations fail. Even as diplomacy gains momentum, regional tensions remain high, with Saudi Arabia reporting drone attacks by Iran-backed groups. Oil prices fell sharply after the pause, while the Trump dismissed concerns over dwindling US ammunition stockpiles. Let's go across and listen in.
They said, oh, that was a good move. Well, the same thing's happening in Iran. People just don't see it. We have destroyed their Navy. We've destroyed their Air Force. We've destroyed their leadership. We've destroyed their anti-aircraft weaponry. Their drones are being made at a rate of about 7%. We destroyed most of their drone manufacturing capability, their missile manufacturing capability. And right now, they're talking to us about making a deal.
And moving on then, Israeli Prime Minister Benjamin Netanyahu has arrived in Washington for talks with Donald Trump, with Iran expected to dominate the agenda. The meeting comes days after US paused its military campaign against Iran and amid a fragile regional ceasefire. The two leaders are also expected to discuss Gaza, regional security, and efforts to expand the normalization in West Asia. And the US Federal Reserve heads into this week's policy meeting under renewed pressure as rising oil prices, fresh tariffs, and resilient AI-driven demand fuels inflation concerns. Meanwhile, Donald Trump has again called for lower interest rates, even as the markets are increasingly pricing in the risk of another rate hike. Let's go across and listen in.
I have a board, and Kevin's fantastic, but he's got a board, and the board members are very political, I would say. So, we fight our way through the race because we're doing so well. But, no, he's got a board. He wants to do the right thing. I know what he wants to do. But you need the consent of some people that have perhaps bad intentions. Rates should be lowered. This country could be at 8%, 9%, 10%, 12% GDP. That's what it should be. We have other countries that are paying less interest rates, and if it wasn't for us, they wouldn't even exist. It's ridiculous, and they call them elite. We have other countries, I don't want to really mention names of countries, but I could give you plenty, that they take money out of the U.S., and because of that, they get a lower interest rate than we do. And it shouldn't be that way. We should have the lowest interest rate in the world. I could take the money that these countries are making, put it into our portfolio, and we should have the lowest interest rate in the world, like it used to be 30 years ago. We always made the lowest rate. If you take a look at Switzerland, where we have a $30 billion deficit, I could wipe out that deficit overnight. Overnight. That'd be money that would actually indirectly come to us. So we got a lot of interesting things going, but our country is the strongest we've ever been. It's the hottest country anywhere in the world.
And SpaceX shares continued their post-IPO slide, extending losses for their 13th session in the last 16 days and wiping out over $1.2 trillion in market value from June highs. The decline comes as investors release lofty AI-related valuations and heavy capital spending, even as the options activity suggests some traders remain positioned for a rebound ahead of the company's first earnings report. And speaking of AI, Anthropic CEO Dario Amodei has clarified that the AI company is not seeking a ban on the open-weight AI models following criticism from across the technology industry. Amodei has said that the focus should instead be on preventing advanced chips from reaching adversaries, tackling industrial-scale AI model distillation, and enforcing safety testing for the powerful AI systems. The clarification comes after major tech firms backed open-weight AI in a joint letter to the US policymakers. And China's industrial profit growth slowed for a second straight month in June, rising 15.1% on a year-on-year basis as falling oil prices reduced the reflation boost that had supported the corporate earnings. While AI-led demand for chips and equipment continues to underpin the manufacturing profits, investors are now looking to this week's Politburo meeting for clues on further policy support amid soft domestic demand. And let's move on then. The Maharashtra Food and Drug Administration is stepping up its crackdown on food safety violations, sending a strong message to businesses that compliance is no longer optional. From stricter enforcement of food safety standards to action against the repeat offenders, the FDA says that the public health remains its top priority. Maharashtra FDA Commissioner Tukaram Munde says that the non-compliant food businesses operators could face license suspensions or even closure until they meet the prescribed norms. My colleague Akanksha is now joining us as she caught up and spoke to the commissioner to understand the road ahead for the food industry. Let's listen into this conversation.
Just joined over here as a FDA commissioner, and since you've been here, you have cracked down a lot of food outlets, restaurants on milk adulteration. So I want to understand from you that is this a beginning of zero tolerance policy across Maharashtra, and can we expect more crackdowns coming in the next few weeks or months?
Absolutely. I may not use the word crackdown. My purpose is basically compliance by the food business operators who are in this sector. They deal with providing food to different individuals, either directly or indirectly. Whoever manufacture food and food related items, those are consumed by the citizens, and it affects their health, their physical and mental health. So that's why in 2011 this act came into operation. What we call Food Safety and Standards Authority was established in 2011, and the act and rules there have been made. This authority has till now issued more than 22 standards for food safety and standards. Those have to be complied by these FBOs. As many of those FBOs are not complying with it, we have to go for inspections, search and seizure operations, and take actions against those FBOs which are not following the standards and which are not abiding by the standards. Those are the minimum standards by which food has to be produced, which has to be served, and that has to be as per the standards so that people's health is not affected adversely. We have started, and this is just the beginning, much more to come.
Yes. So now we understand that FDA has suspended licenses of many food outlets, be it Mumbai's iconic ice cream sandwich parlor K. Rustam, or be it Parsi Dairy Farm. But now we want to understand that when can we resume they can resume their operations, because recently we have seen that K. Rustam has put down the poster saying that they are under renovation. So when can they resume their operations, and what can be the process for the same?
There is a well laid down procedure for resuming the operations. Once the license is suspended or registration is suspended, they have to comply with the deficiencies which have been found first. Once they comply with it, re-inspection of the same FBO is done by the officers, and that re-inspection report is submitted. Simultaneously, the FBO, after compliance they have to appeal for reinstatement of registration or license. And if the appealing authority finds that re-inspection is satisfactory, they have complied with the standards, and they commit that they would comply with all the standards which are meant for them. In that case, hearing takes place, and based on hearings and the findings of re-inspection and the submission of report by the concerned FBO, on the merit basis decision is taken, and they can resume the operations after suspension is revoked by the competent authority.
All right, with that, it's time for a quick breather on the show. Don't go anywhere after the break. We're getting you all the cues you need to watch out for before the start of these streets. Stay tuned. Welcome back. You're tuned into Market Cafe, and let's talk about what's happening back home. HDFC Bank has imposed a monetary penalty of rupees 1 lakh each on its managing director and CEO Shashidhar Jagdishan and Chief Financial Officer Srinivasan Vaidyanathan and the group head Retail Assets Arvind Vora, along with warning letters following the conclusion of an internal review into the bank's arrangement with the Maharashtra State Road Development Corporation for garnering deposits in 2017 and 2021. Ankur is getting us more details on this.
Yes, HDFC Bank has concluded the internal investigation of MSRDC issue, and with the special disciplinary committee, which was consisting of independent directors, has now concluded that there was no malified intentions which were there by the bank employees, but yes, there was a business overreach which may have been there. And was it consistent with the RBI direction? It has found that it may not be consistent with the RBI directions. But having said that, there will be a penalty which will be imposed on MD and CEO as well as 2 of its other employees. And this is first time that a penalty has been imposed on MD and CEO ever since there has been issues which were raised on corporate governance about HDFC Bank, and especially after new chairman taking over. This is the first action which has been taken by the board, and now these findings will be shared by Reserve Bank of India. Now it will be interesting to see how Reserve Bank of India looks at this issue of the internal findings which are there by HDFC Bank, and more importantly, the questions are there whether or not MD and CEO is going to be reappointed.
All right, and earlier today we had a conversation with the Supreme Court of Advocate H.P. Ranina, who said that the RBI will look into this matter and take actions accordingly. Let's go across and listen in to what he had to say.
Well, from a governance point of view, certainly they have followed the procedure. They have got the independent directors to investigate the matter, and then they have come up with the certain decision of levying a fine on the CEO and the others. So governance point of view has been taken care of. How the RBI regulator will look at it will have to be seen, whether there's been any specific violation. RBI will take a strict view. Has there been a specific violation of any of the guidelines or regulations or any circular issued by the RBI? If at all, then they'll take whatever action they think fit. But this is a matter of facts. So actually, they'll have to go into all the facts and then come to a decision.
And moving on then, Bharat Electronics has reported a strong first quarter, beating the estimates on revenue and EBITDA. Though the profit came in slightly below what the street was penciling in, the company has reiterated its FY27 guidance. Avi is joining us with the key highlights for BEL's number.
BEL, that is Bharat Electronics, has come out with its Q1 FY27 results, and the results are quite strong. The top 4 to 5 important points are the numbers. Starting from the numbers, the revenue and EBITDA have come above estimates, and they have beaten the estimates by a huge margin, with revenue coming in at 5,500 crore rupees. Talking about the profitability, is in line with what we were estimating at ET now. Talking about their order book stands at 72,258 crore rupees and has slightly declined by over 3.5% on a yearly basis, with a book-to-bill ratio standing at 2.58 times. Talking about the management guidance for FY27, they say that the order inflows were 3750 crore rupees in the quarter gone by, and they have reiterated the FY27 guidance with 15% revenue growth, margins to be on the north of 28%, along with the order inflows of 55,000 crore rupees, including QRSAM. The FY27 capex and R&D to be at 1200 crore rupees and 2200 crore rupees respectively, with the revenue mix at 90:10 with respect to defense and non-defense revenue. Also talking about some of the brokerages, Nuvama has given it a target price of 485 rupees with a buy call on the stock, stating that the large ticket size order inflow along with the margin expansion will help the company reach new heights, and that is the reason the company has given it, Nuvama has given it a target price of 485 rupees. So all in all, a strong set of results with from Bharat Electronics beating their estimates on revenue and EBITDA with profitability in line. Brokerages like Nuvama giving it a target price of 485 rupees and management giving a strong FY27 guidance of for margins to the north of 28%.
And moving on then to the next counter that will be in focus, and that is Coal India. After reporting its Q1 results, brokerages remain mixed, while Morgan Stanley and Citi have remained cautious. The Motilal Oswal and Jefferies remain constructive on the stock. Ashesha is now joining us with what the brokerages have to say about Coal India. Over to you, Ashesha.
Well, yes, for Coal India this time, although revenue has come in line to better than street expectations, it's a big miss when it comes to bottom line, and that is because company incurred higher operating expenses in the quarter gone by, and that is what weighed heavy on the company's EBITDA this time around, which has been weaker than what the street was working with. In fact, several brokerage houses have come out with their report. Let's start with Citi. They are maintaining their neutral stance on the stock with a target price of 430 now versus 440 earlier. They say wage revision, of course, is due in July 2027, which could perhaps weigh heavy on the earnings in the next few months. While valuations limit downside, they lack visibility on upside triggers, and hence they are tweaking their FY27, 28 and 29 EPS estimates lower, anywhere between 2 to 4%. Jefferies, meanwhile, has also retained their buy stance with a target price of 500. They say recovery in power demand, potentially boosted further by a weak monsoon, is likely to aid volumes in the next few quarters, although this quarter earnings were weak, but perhaps we could see some bit of recovery in the coming quarters. Motilal Oswal has also reiterated its buy stance. 510 is their target price. They say cost pressures arising from geopolitical tension continue to weigh heavy on the numbers in the first quarter, but they expect these cost headwinds to normalize in the next few quarters. Morgan Stanley, meanwhile, has maintained its equal weight stance, and 420 is the target price. They say weak operating quarter with adjusted EBITDA below expectations was what weighed heavy on Coal India's numbers this time. So clearly, bottom line was a miss this time around, but most brokerage houses are maintaining their stance, and there have been no major revisions in the target price as well.
All right, Ashesha, thank you so much for giving us a lowdown on Coal India. But Tata Power has also delivered a strong first quarter, beating the street estimates across revenue, EBITDA and profit. Do take us through the number crunching for this as well.
Good set of numbers that have come in from Tata Power as well, and across the board it's a beat as compared to street expectations. Let's start with revenue first, and that has come in at about 19,051 crore, better than street expectations. EBITDA margins at about 21.1%, and revenue, remember, has grown by about 6% YOY, with margins coming in at 21.1%. Now remember, the renewable segment PAT also rose exponentially in the quarter gone by, so that was a benefit. Solar manufacturing PAT surged nearly 4 times, so that was another positive, and it reported highest ever capital expenditure in the quarter gone by, with the renewable portfolio expanding further. So capacity expansion plans clearly continue to remain on track for Tata Power, but for now numbers definitely look better than what the street was working with across all parameters, and even on a year-on-year basis the company has reported very strong growth.
All right, let's talk about some of the other counters that will be in focus besides these earning candidates. Ashesha, take us through all the stocks that you've picked out for us that will be in focus today.
Well, yes, several stocks that will be in focus today, and let's first start with earnings then. And several companies reported the numbers other than the important numbers. And let's start first with Northern Arc then, and it has reported very strong set of numbers for the quarter gone by. Net interest income has risen by a solid 44% on a year-on-year basis, with profit rising nearly 17%. Clearly better than expected set of numbers, and strong growth on a year-on-year basis is what Northern Arc has reported. Usha Martin has also reported very strong set. Revenues rising 17% to come in at about 1,033 crores. EBITDA up 45%, and margins have expanded from 16% same time last year to nearly 20% now. Godfrey Phillips on the flip side has reported weaker than expected set of numbers, and even when you look at the numbers on a year-on-year basis, it's a decline. So net revenue has declined by 19% YOY. EBITDA is down a whopping 47%. So clearly weak set of numbers that Godfrey Phillips has reported, and margins from 22% same time last year have come down to just about 14.5%. JK Paper meanwhile has also reported better than expected set of numbers. Revenue up 14%, EBITDA better than expectations. It has come in at about 290 crores, and profit meanwhile has risen by a solid 64%. So very strong set of numbers that this paper company has reported in the quarter gone by. Lastly, Gallant Ispat, over here it's a weak set, because although revenue has risen marginally by about 2%, we have EBITDA margins which have contracted a whole lot from 22% same time last year to just about 16%. So bottom line was weak this time around for Gallant Ispat, which is why we could see some negative reaction on the stock today.
All right, Rishita, thank you so much for joining us with all the stocks that will be in focus today. But also, let's talk about HUL. Well, a decent quarter is what we're penciling in for HUL, with revenue that is likely to grow 6% on a year-on-year basis, while the ice cream business demerger is likely to drive the margins. My colleague Snehi is joining us with what can we expect from HUL.
Well, yes, if you take a look at HUL's first quarter earnings, we're largely expecting to see a decent quarter from the company this time around. On a consolidated year-on-year basis, if I take a look at what the revenue expectation is, 17,516 crore rupees is what we are penciling in, which is an uptick of 6% on a year-on-year basis. This is, of course, after the demerger of the ice cream business, but if I had to count this on a like-to-like basis, then the revenue growth is expected around 9%. The EBITDA is seen higher by 7%. The net profit is seen at 2,800 crore rupees. It is an uptick of roughly 2% on a year-on-year basis. Let's talk about margins. Margins are expected to do really well. About a 40 to 50 bips tailwind is going to be seen in the margins this time around because of the demerger of the ice cream business, and that is going to play out. So margins over here, we are expecting at 23.1% compared to 22.5% this time last year. And remember, the management's guidance has constantly been between 22.5% and 23.5%. So this 23.1% number that we're penciling in is slightly on the upper end of the management's guidance and looking good on this front. Now, in terms of some other key expectations, our consolidated volume growth we're expecting to see at 6%, consolidated underlying sales growth expected at 3%. The company has also recently undertaken a 4 to 5% price hike, so we'll see what how the pricing action plays out. In terms of segments, home care is expected to grow 12% on a year-on-year basis, aided by price hikes across the portfolio. Beauty expected to grow 13%, personal care expected to grow by 6%, led by price hikes in soaps, and mid-single-digit growth of roughly 8% is what we're seeing for the food segment. So lastly, when the numbers do come out, watch out for the management's commentary on growth outlook, margin guidance, if there is any revision over there at all, outlook on raw material prices, the El Nino impact, how they're expecting that to play out for the company, pricing outlook, any further pricing action, and update on the performance of the quick commerce segment, along with rural and urban demand, how the trends are shaping up. So yes, all in all, we're expecting to see a decent quarter from HUL for quarter one.
All right, so those are the stocks that will be in focus on account of the earnings and other news flow. But with that, it's time to pull down curtains of this edition of Market Cafe. I'll take your leave. Thank you so much for tuning in. Don't go anywhere. The market is coming up next.